This is the FFR Trading Market Minute. Again, this is a daily candlestick chart of the SPY. That's a proxy for the overall U.S. stock market. And if you have heard the saying before, markets take the stairs on the way up and the elevator on the way down. This is what the stairs on the way up looks. This is what we're getting here. You can see the market is just kind of stair-stepping higher here. The scary thing about this is, like the other part of the saying is, when it drops like an elevator, right? So what can we expect here? This is kind of a frustrating type of market to trade. I'm going to go out to the monthly chart here. On the monthly chart here, I've drawn a couple of lines here. So let's just kind of go back. This was our COVID crash here, right? So this low here, right, was the low of the COVID crash. We had that explosive rally after COVID crash, and then we had our crash, it was about 30% crash there in 2022, and then we bottomed, right? And we've had this big rally, took out the prior all-time highs, right? We know where we are now. So what I did is, where can we expect the market to go here? So I drew a couple of lines here. The first set of lines I drew is from the low of the crash, the flash crash there in a COVID crash, I should say, right, to the high here. I drew a line there and I created an equidistant line and started off of the low in the crash of 2022 and projected that out. So in other words, this line is the same length as the line from the COVID crash to that peak here. That projects out a target about we'll call it 610, just under 610 in the SPY. There is a little smaller target here. If we look at this move up here and then the pullback, right? And now this move is equidistant to this move, just about, right? We're just about there. So that gives us a couple of targets to the upside. So we're looking at maybe about 530 to the upside. We're overbought here on the monthly chart. You can see when we were overbought on the prior, on the monthly chart here, we got a few months of correction there. So we could see that as high as early as around that 530 level. But above that, the bigger target, all right, based off of that swing back from the COVID crash to the peak here, right, that projects out to, like I said, we'll call it 610 in the SPY. So just something to throw some targets out since we don't have anything, back here. We don't have any prior resistance. We don't have any prior supply or anything to go off of there. We're just projecting a target out. I'll go back to the daily chart here now just to take a look at, again, that first downside target was just a gap fill that we had. In fact, let me just take all this off now. So our first target on a pullback was this gap fill here, which we obviously filled that gap. Again, you've got another gap fill down here to the downside, and then the bigger gap down here where this demand is. That's kind of the last big push from buyers with that big gap up there. And like I said, since then we've just been stair-stepping up here. So those are some targets to the downside if we do roll over again around that 530 level. Other than that, we've got our new target up there, like I said, around 610, right? Economic data set for next week. April Fool's Day, we've got the ISM Manufacturing PMI. Wednesday's ADP Employment Change and ISM Services. And Friday's Average Hourly Earnings and the big non-farm payrolls report. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.